These are 13 mistakes to avoid as an all-in Tesla stock investor. Getting to a net worth of over $10 million taught me to mostly look at what people do instead of just listening to what people say. I do have very big trust in Elon Musk. However, if you took those words exactly as said, or if you interpreted them in the best possible way, meaning Elon Musk would not sell again, you would have expected to have Elon not sell Tesla stock anymore. And as we know, Elon Musk sold in August, and that would have come to you as a surprise. Next mistake to avoid as an all-in Tesla stock investor is to invest into Tesla stock for less than 5 years, especially if you go all in. Check this out. If you invested your money into Tesla stock in 2014, let's say September, at $18.50 per share, you would still be down even in 2019, basically 5 years later. I would say for myself, I have a minimum time expected to hold Tesla stock until at least the end of 2030, which, that's basically around 8 years from now. So I would say definitely no less than 5 years and preferably no less than 7 years. Number 3 is to assume that the stock market will price Tesla stock rationally. I first bought my shares in early 2019. I bought them when we adjust for the current split just under $20 per share. So what happened later? I looked at the stock and I was like, this company is making money. There's no way the company is going to go bankrupt. If there is a big issue with, let's say, profitability, someone else can just easily buy Tesla. It's going to clearly work now. There's no way the stock is dropping like by 50% from this point. No way that's going to happen. As we can see, right around here, I was not exactly right about that one. My timing was a little bit off, but you can see what happened later. Number 4 is to assume every Tesla stock bear is stupid. Of course, we can make some exceptions. Kidding aside, I do think it is important to assume that everyone else is smarter than you. So for example, when Ray Dalio, who founded the largest hedge fund in the world, sold Tesla stock earlier this year, you gotta think, is there something that they know? But let's just be a little bit serious for a moment here. When you see someone as rich as Bill Gates shorting Tesla stock, it doesn't mean they are right. I'm definitely not proposing any idea like that. But it is something to really think about. Is Bill Gates not smart? I mean, he founded Microsoft. He ran Microsoft. It's a phenomenal company. He is ridiculously rich. All of us make mistakes eventually. But I would not be so fast to just say anyone who says anything negative about Tesla stock or shorts Tesla stock is low IQ, as an example. Mistake number 5 is to only assume the best and to not expect the worst. I like to assign a probability to basically the worst case scenario. One thing that I can expect every single day is something going wrong every single day. When things don't go wrong, that's when I get nervous. What am I missing? What is going on? Am I not sharp enough? Am I losing my edge? Is what I start thinking when everything is just going well. I get paranoid, and that helps me stay sharp. Number 6 is not being comfortable with Tesla stock being down as much as 90% from its peak high. I'm definitely not saying Tesla stock is going to be down 90% from its all-time high. Definitely not. But I would be comfortable if it went down that much. Look at this example with Amazon stock. In the year 1999, it was as high as over $5 per share. And then, just a short little while later, the stock was trading as low as 36 cents. And I think it actually went down quite a bit lower than that as well at one moment. That's more than 90% drop. Look right here, low of 27 cents. That's a lot more than 90%. However, Amazon has been a great company, and if you just held the stock, even if you entered at the very highest point in the early 2000s, late 1990s, and bought the stock at, let's say, $5 per share, you would still be up today more than 20 times. The number 7 being to not ignore your own bear case. It's important to remember it's so easy to get excited about Tesla stock. You got full self-driving, so easy to get excited about. But I like to project my bear case to 2030, and then I compare that to base case of S&P 500, which is all I had before I sold my S&P 500 and invested those proceeds into Tesla stock. It's very easy to get lost. I mean, you look at this like, oh my God, this is amazing. You start thinking about 4680 batteries and projecting what that will do to Tesla's margins, or how much Tesla could cut its prices without losing any margin. And it's easy to get lost yourself into all of this excitement. But my preference is to look at the downside first, and then I make my investment decisions based on that. And when I compare my bear case for Tesla stock until 2030 and compare that the returns of S&P 500, just base case, in my projections, Tesla stock does better in its bear case scenario. But I continually come back to this bear case and I'm looking if I'm missing anything, and I'm continually revising it and updating it. Number 8 is to sell Tesla stock at a loss. We do need to have some cash aside if you really have an emergency that comes up, and it would be so unfortunate to sell Tesla stock at a loss. So I like to have a little bit of cash aside, or in my case, I also have strong income. So even if something unexpected comes up in my life, let's say, then I can just fund that problem using just my cash flow. Number 9 is not taking competition seriously. And I know this sounds a little bit, what competition? Well, right now, Tesla has no competition. And so did this obscure company in, before iPhone came out. I am looking at all of the possible competitors, that will compete with Tesla. I just see many, some of them coming out from China. Right now, I don't think we need to be afraid of anyone at all, but I don't think that will stay that way forever, especially if Elon Musk steps down later. And also, being up on Tesla stock, if you invested before Tesla stock 10x and now you're enjoying those returns, it's very easy to get a little bit confident. The way I build businesses, every time I build something new, I'm always worried. What do they know that I don't? Where are they smarter than me? I try to work pretending that all my competitors are trying to take everything away from me 24/7. That just makes me a little bit more sharper. And I just assume that everyone else is smarter than me, that everyone else knows something I do not, that everyone else is going to do better than me. And then I try to figure out, what do they know? I definitely don't want to get too cocky and be in this position later. Number 10 is to acknowledge that we have a bias. We, as Tesla stock investors, we want Tesla stock to go up. And we have this bias, and we have to fight against it. Now, it makes me a better investor when I fight against my bias, when I acknowledge that I have a bias, and then I have to compensate for that and look for reasons why would Tesla stock go down. And then that makes me a better investor. And to add to this as well, it is important to also expect very strong pushback when you do something that most people would not expect to be a norm. Being all in Tesla stock in your stock portfolio or my stock portfolio, that is not a normal thing to do. And of course, the wisdom that most investors would have would say this is extremely risky to do. So you have to expect that pushback, and then time will show eventually who is right. Number 11 is investing into something, which includes Tesla stock, just because someone else said so, because it's a good investment. You have to do your own numbers. I like to only invest into things that I fully understand, and I have done my own numbers and research. Number 12. And this one I never break. This one I'm extremely careful about, and that is to not go into margin. Now, if you have gone into margin, I respect how brave you are. That is not something I will do, hopefully ever. There are, however, downsides that I am a big fan of when it comes to margin calls. I like when the bears get squeezed. The ones that shorted Tesla, the ones that thought they could out Elon. Don't do that. Don't short Tesla. Now, if you do have margin, so meaning that you borrowed against your Tesla stock. So if you have, let's say, $1 million in your Tesla stock, and you borrowed against that Tesla stock, let's say you got $100,000, that means you got 10%, which you would think is quite safe. And if you look at Amazon, and if you happen to buy at the very peak, or if you just held Amazon stock and then, you saw, let's say you invested before this, and then you look at the all-time high of, let's say, $5.53, and you would think, I can go into margin. Let's just do 10%. And maybe you even buy more Amazon stock with that extra 10%, right? And then in the year 2000, it goes as low as 40 cents. In the year 2001, it goes as low as 27.5 cents per share. You would get margin calls. So imagine having, let's do like a bigger number. Let's say you have $10 million in Tesla stock, which in Tesla community, we do have people like that, that have $10 million in Tesla stock, and who have margin. I want to specify that. And if you have just 10%, and if we have that same scenario, and Tesla stock loses 90% of the value, you lose everything. There's no coming back from that, because you got margin called. But on the other hand, if you didn't go into margin and you have that 10 million, okay, that goes down to 1 million, okay, bad day, bad year, bad time for sure, big headache, you're probably feeling humiliated, everyone's making fun of you. But then later, you didn't lose these stocks, you still have the same amount of shares that you had before. And assuming that your projections eventually come true, everything works out fine. Number 13, and this one I find actually quite easy to do because it's entertaining. And that is to I try to pay at least as much attention to Tesla bears when I compare how much attention I pay to Tesla bulls, even if they cherry pick their facts, their opinions, their arguments. Doesn't matter. The reason why I like to do that is because first, I like to not lose my money. And if there is going to be something uncovered horrible that will happen to Tesla stock, it's going to come from the bears first. I don't think it would come from the bulls first. However, if it does come from the bears first, because, for example, let's say it comes from Mr. Gordon here, it would appear just regular cherry picking, just a regular Tuesday. I would like to be the first one to find out all the bad things that would happen to Tesla stock. And then if I need to change my strategy, I'm open to it. Now, I am not so open that, I'm not so open-minded that my brain is going to fall out of my head. That's not something I'm a fan of. I personally believe that Tesla stock will more than 10x sometime before the end of 2030. These are 48 reasons why I only own Tesla stock. Click on the video right now if you haven't seen it yet. My name is Matt Posius. Like this video, subscribe if you haven't yet, and I will see you in the next video. Thank you for watching.